After a record $28 billion profit, BP slows its oil and gas retreat. Chief Bernard Looney claims that the world requires secure energy in addition to renewables. After experiencing the highest annual earnings in its 114-year history thanks to skyrocketing prices for fossil fuels, BP has reduced its commitment to reduce oil and gas production, which set a precedent for the industry. The company reported $27.7 billion in underlying profits on Tuesday, surpassing the $26.3 billion it earned in 2008 and more than doubling the $12.8 billion it reported after a strong 2021. As part of a plan that was launched 3 years ago by Chief Executive Bernard Looney to reduce the group's emissions and shift to lower carbon forms of energy, BP has committed to cutting oil and gas production by 40% by 2030. As a result, the company is currently undergoing one of the most ambitious strategic overhauls in the industry. However, in a move that will be viewed as a significant reversal, the group slashed its plans and stated that oil and gas output in 2030 would now be just 25% lower. The change comes after a turbulent year in the energy markets caused by Russia's war in Ukraine. The war increased profits for the industry and increased household costs, sending policymakers, especially in Europe, scrambling to find new energy sources. Looney stated to the Financial Times, "Governments and societies around the world are asking companies like ours to invest in today's energy system." Despite the fact that BP's shares performed better than those of its European competitors last year, total shareholder returns since Looney took over in February 2020 have been the lowest of any Western energy major, and none of them have set a strict goal to reduce oil and gas production like BP. Looney argued that there was no shift in strategy with the altered oil and gas production guidance, which also means that the country's carbon emissions will fall more slowly than expected. He stated, "Investing in the current energy system and investing in accelerating the energy transition is our strategy. We're considering it." For the final 3 months of the year, the company's underlying profits were $4.8 billion, up from $3.3 billion the previous year, but slightly below analysts' average estimate of $5 billion. On Tuesday, BP shares closed up 7% in London. Looney insisted that BP's goals to achieve net zero emissions in operations, production, and sales by 2050 remained industry-leading, but that the company should produce about 2 million barrels of oil equivalent per day in 2030, up from its previous goal of 1.5 million barrels per day. It stated that those 5 businesses should be able to generate earnings before interest, tax, depreciation, and amortization of $10 billion to $12 billion in 2030, or about 20% of the group's earnings, thanks to an increase in transition spending to $7 billion to $9 billion annually by 2030, which is equivalent to more than half the group's anticipated expenditures. In the past, BP had difficulty persuading some investors of the potential returns it could achieve in sectors like renewable energy. Following the announcement of $11.25 billion in share buybacks last year, BP stated that it would buy back an additional $2.75 billion in shares and raise its dividend by 10% for the fourth quarter.